Alright, in this video we're going to look at the 941. The 941 is a quarterly return for Social Security, Medicare, and federal income tax withholding payments. So it's the employee and employer portion of Social Security, employee and employer portion of Medicare, and the employee withholding for federal income taxes. Now, one thing that I forgot to mention in the last video had to do with when we pay those any of these payments, whether they're voluntary or not. We debit the liability account and we credit cash. That's always going to be the case. So I just want to touch on that, but I think you guys can figure that out. You guys have done lots and lots of journal entries. So the 941. This is, there's some pictures of it, and let's go through. Page 184 is the picture of a 941, or the first page of a 941. 185 and 186 explain all of those lines. Very, very helpful. If you can't remember what something does or what you're supposed to put someplace, look at pages 185 and 186 for the explanation for each line. 187 is the back side, or page 2 of the 941. Page 188 has a voucher. This voucher, let me see if I've got pictures of some of this. No, I guess I don't. Okay, so we're going to go over to the, oh, why is that not working? There we go, our 941. So this is what the 941 looks like, and we'll go through these lines in just a minute. That's page 1. This is page 2. Here is the voucher. If you have to make a payment with your 941, you would have to send in this voucher with it. Remember that we want to do that electronically, so this would be an electronic voucher. And then the last page, keep going here. It doesn't have it. The Schedule B, which is on page 189. None of these problems really use the Schedule B, so that makes it a little bit easier. But let's go to the top of this thing, the 941. And this is using PSB 4 on page 219. The reason I'm going over to do one of those problems rather than the example in the book is the example in the book is a little too simplistic, and it prevents me from explaining one of the most confusing things about this form. So let's read this. It says, complete the form 941. Let's see, for Bouncing Babies Company, gives all the information, their monthly depositors. Assume that all necessary deposits were made on a timely basis. All 32 employees worked during each of the 3 months for that quarter. And the company elects to allow the accountant to discuss this with the IRS. That has to do with how they sign it. So this is for the second quarter of the year, so we're going to mark the second quarter, have all of their important information up here. And it said that there were how many employees? Because I see 6 employees listed here, and I thought I read that they had 32 employees. Yeah, that doesn't quite work, does it? Well, that's because this is long neck. Hold on. I guess I have the wrong one. So we'll go ahead and pull up the correct one. That's PSA. I want PSB 4. This should look better, yes. So this is for January, February, March. It said the first quarter. So first quarter, 32 employees. That's what I wanted to find. So all 32 employees. So it has to tell you how many employees actually got paid. And that doesn't necessarily mean the number of employees that you had on December 31st or on January 1st or on March 31st. It's the number of employees you paid during the period. So even if they're not there anymore, you count those employees who were terminated. So 32 employees total. And we want our total wages, tips, salaries, our total compensation goes in line 1. So we need to add our total compensation altogether, first quarter earnings, and that was in, if we're looking at page 219, the first quarter earnings for federal withholding tax was $331,200, so that's what we're putting there. Federal income tax withheld during that period, $37,240. I was just looking to see if it gave us that number. We have to add the taxes together. So federal withholding for January is $12,400, February $12,720, and March $12,120. Added together is $37,240. Next, so that's compensation for federal income tax purposes and federal income tax withholding. Line 5 gets to Social Security and Medicare. So total Social Security wages are given to us $367,903, and Medicare wages were $367,903. So no one made over $127,200. We're going to multiply that by 0.124. That means it's 12.4%. So they're multiplying this grand total of all the compensation for the entire quarter times the full 12.4% to get 45,619, and the full Medicare times 2.9% or 0.029 to get 10,669.19. So what I want to point out here is that all along when we've been paying our employees, we calculate the taxes per employee, and we might round up or down depending on what the decimal places do. Sometimes we have a lot of rounding that we have to do within each pay period. Here, we're kind of eliminating that. We're taking the grand total, so we're eliminating a lot of that rounding, which is going to cause a little bit of a discrepancy in a little while. So let's add these together. We have add column 2 for all these lines. We get 56,289.16. Then we're going to add that to line 3, 37,240, and we get a total taxes before adjustments of 93,529.16. However, let's go to this page here. All of the taxes that we paid together for month 1, we add January all together, from the book, February all together, and March all together, they total 93,529.18. Well, when we did a calculation, we got 16 cents. So because of the rounding that we did to get these numbers here each month, or each pay period, and then added together for each month, we've got a rounding difference of 2 cents. So when you get to line 7, it says current quarter's adjustment for fraction of cents. That's all that is the rounding. So you can't really do this until you know what this is. So I always recommend come down here, calculate what this is, what this needs to be, unless you already knew that the total deposits equaled 93,529.18. So if you'd added everything together, that's what you would have gotten. For this particular problem, because it was laid out per month, it was easier just to come back here and do this the first time instead of adding everything all together to get 93,529.18 and then adding separately to get all these individual numbers. So we have 93,529.18. We can kind of work our way backwards. The total deposits were 93,529.18. Total taxes after any adjustments or credits. Since we don't know of any adjustments or credits in this problem, we're going to assume that it's 93,529.18, 0 for those adjustments or credits. Total taxes after adjustments, 93,529.18. All right. The only adjustment then that needs to be made is a reconciliation between 93,529.18 and what we calculated up here, 93,529.16. It's 2 cents. So what we do is whatever we got up here, we kind of force it to match the total taxes after adjustment down here by adding or subtracting those pennies. It can be anywhere from a penny to no pennies. The example in the book uses no pennies, which I think is confusing because it doesn't take this into consideration. Anywhere up to like 15 cents maybe, depending on how large the payroll was. So it's still going to be pennies. I don't know why they call it fractions of cents. It has to do with the fractions in the calculations, but this is how that's done. Some of the problems in the homework are a little more difficult, especially the continuing problem. I've had students who've had quite a few difficulties with that problem. I just want you to remember to back your way into this fraction of cents. Again, all it is a reconciling number between what we calculated up here, the full reconciliation, and what we actually paid. So that's our 941. And then we just signed it. We had him sign it, William Gordon. And I don't believe we owed anything because we paid all of our taxes, so we don't have to fill out the voucher at the end. And that's the end of that particular problem.